Good morning, y'all. I'm Catherine Ross of TheStreet. I am here on the floor of the NYSE with Jim Cramer. Jim, we've got Alphabet earnings tonight. What are your thoughts?
Well, I can just tell you that Alphabet has become a company like Apple, where all people care about is how much it costs to get them clicks. And it's just been disappointing, and they never really reset it. If they tell a story about, say, what their healthcare moonshot's doing or where Waymo is in terms of being everybody else, they break out a lot about YouTube and just talk about YouTube and how many views that has and how that's become a juggernaut. If they talk about how they're going to buy back a lot of stocks, they have a lot of cash, not with the Sanders notwithstanding, then you'll want to buy the stock. But if they just talk about how many people they have and how much it costs to get them, then the stock goes lower. We own it for Action Alerts because we think it's just a matter of time before Ruth Porat tells that second story. And then the stock's up big. Until then, the stock just goes down 50. That's what it keeps doing.
And I just want everyone to know that the Alphabet is real money stock of the day. Now, Jim, I also want to talk about Starboard's investment in Papa John's and also in Bristol-Myers Squibb, which you tweeted about this morning.
Right. Okay, so in Papa John's, that's a notion of stability because people want to be sure that Schnatter doesn't come back because of the racist comments that he articulated. I would say this, that don't get too caught up because as much as Jeff Smith helped Darden very much when he came in, Domino's is just really a juggernaut here, and pizza coming back a little. The category's not a growth category anymore, so it's more zero-sum, and the zero has been the what I would describe as the growth of PZZA.
And what about Bristol-Myers Squibb?
All right, now I think that's a sign that when Starboard takes that position, that maybe they can somehow stop Cafario from buying Celgene, or more importantly, put Bristol-Myers in play. I think neither's going to happen. I think the Bristol-Myers to buy Celgene story comes true. I think it's a very powerful combination. I worry about Bristol's Opdivo franchise after listening to Merck last week talk about how great their franchises for Keytruda at $5 billion. I do worry about Celgene, obviously, in the end of patent for Revlimid, but I do think that they have 5 new drugs that will make up for Revlimid. I think Bristol-Myers identified those and also gave you a CVR for some of the drugs that aren't working out. So the combination of the two does bridge the gap because you can have, there will be some substantial good news coming out with Bristol and Opdivo. It's not going to lose everything, I believe, head-to-head to Keytruda. But in the meantime, you do have that bountiful cash flow that comes from Revlimid, even if it's short term. So I think the combination is a good one. I don't think anyone's interested in Bristol. It's an $88 billion company. The presumption is always that Pfizer will be interested. I do not think Pfizer is acquisitive here at all. J&J not at all either.
Now, Starboard's not the only one spending money. Tesla also announced that they were buying...
Maxwell Tech. I mean, I remember Maxwell. It used to be a bigger company, by the way. And I helped... there was a very botched secondary for them in the 80s that everyone remembers. But Maxwell had been the pulse of defense at one point, and now it's obviously become something more with battery. Not that important acquisition versus the... let's distinguish the management-led buyout for Ultimate Software. It was a 50 times earnings stock, and yet the management still came in and felt that it was undervalued. It's funny because it's being reflected immediately in our cloud kings that we always talk about. VMware, Workday is going up, Coupa is going up, Salesforce. None of those is going to get a management-led buyout. So those who are buying on that rather than buying on what I regard as being the fundamentals are going to be mistaken. And remember, we should have a sell-off overall in the market because oil is down. And the correlation between oil, which is now down $1.50, and the stock market has been almost 1-for-1. And so the algos are set to sell. So if oil stays down $1.50, you're going to see selling throughout the day.
Why did you write your real money column this morning? What led you to that?
Okay, so that is a piece about who's going to be right. These semiconductor capital equipment and the semiconductor stocks are indicating that we're at a trough and that things are going to go up. The industrials that are involved in making equipment for that industry say we're not at a trough, we're just beginning. So if you don't get some good news beyond the $5 billion buyback that Lamb gave you, then what's going to happen is that the winner is going to be the industrials. Illinois Tool, which is up nicely today. It really wasn't a bad quarter at all. It shouldn't have been down. DuPont, which has said some things. I didn't even, 3M, not good. There's many more that I can put. There's a lot of companies, Honeywell, that make materials for semis. And it had been a great offset to autos. But if you listen to the calls, you say to yourself, wow, their diversification is starting to hurt them. So who's right? Lamb saying that the cavalry's coming, or Illinois Tool saying that the cavalry's nowhere in sight? That's where I did it.
And I think that's really fascinating. It's a complicated piece, but it's also a correlation that I know myself I didn't put.
Yeah, I mean, a lot
together.
of people don't. I think that what's happened is that aerospace has got no flies on it. Automobile is bad. Housing is bad. Commercial construction is not bad. Commercial construction, including even restaurants and apartments, and then semi-equipment bad. So because there's so many chemicals that go in to making a chip. So you've got what I regard as being this strange dichotomy between the tech companies being very excited and the companies that make product for tech companies being unexcited. So let's see who's going to be winning. But if Illinois Tool is right, then you'll wish that you sold the semi-equipment. It's kind of interesting.
What does the State of the Union mean for the state of the markets?
Well, Trump is uniquely related to the stock market, so he's certainly not going to do anything to hurt it. People are going to bid for U.S. concrete on the wall. That's a mistake. There are other businesses that aren't as strong for U.S. concrete. People are going to buy defense stocks. That's a mistake. The Democrats in the House even though they like defense, I don't think that they're going to be spending. And then the rest is, I think, just going to be rah-rah. I don't think he's going to say any new initiatives because there's no more money. You certainly want to agree with Sanders and Schumer saying the company shouldn't buy back stocks. He just, I think, if anything, is just going to say wall, wall, wall. Look, he's fixated on the wall because it's very clear that the base doesn't want immigrants here. And the base, whoever that is, he will placate them to any cost. And so that's why I don't have much expectation that we'll talk beyond that.
All right, Jim, I want to head over to Action Alerts Plus because I want to talk about Alphabet, Disney. We've got a whole bunch of topics. All right, guys, so thanks for joining us. You can catch us tomorrow.